Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with Bank of New Zealand. Today we look at figures for the September quarter on unemployment and employment, and unfortunately they were weaker than expected. The unemployment rate rose to 6.6% in the September quarter from 6.5% in the June quarter. Economists had expected it to fall to 6.4%. Jobs growth was also weaker than expected, just 0.2%. Remember, you need a lot more than that to actually reduce the unemployment rate because of the number of people joining the workforce. Jobs growth at 0.2% was just a third of economists' forecasts. The two major factors, Christchurch, the rebuild was slower than expected, and that's really also hit retailing and hotel work. Remember, the CBD has been destroyed and many hotels have been shut down, and we've yet to see the beginning of the construction work. Also, part-time jobs fell in the September quarter. This was a surprise because the Rugby World Cup was expected to improve some part-time work, such as bar work and that sort of thing. Now, the reaction to these weaker than expected figures was that the New Zealand dollar fell to just above 78 US cents. Remember, just a few days ago on Monday, it was at 82 US cents. Now, of course, the turmoil in global financial markets, particularly in Europe, is helping to drive that, but the currency certainly dropped almost half a cent after these weak employment figures. New Zealand wholesale swap interest rates, remember these are the ones that the banks look at before they set fixed mortgage rates, they fell another 2 basis points and they're down around their lows. Over the last week, banks have cut their fixed mortgage rates by about 40 to 50 basis points, in part because of these drops in these wholesale interest rates. But remember, many people are still on floating rates or are choosing floating rates, which are right at the bottom or even lower than most fixed rates. And those floating rates depend on the outlook for the official cash rate. Now, economists haven't changed their view that much on what the Reserve Bank will do with the official cash rate next year because of these figures. But it's clear we're looking at a delay in the official cash rate hike until mid-2012. And that's if Europe doesn't implode. I'm Bernard Hickey. That was a special economic weather report brought to you in association with Bank of New Zealand.